Hi, I'm Jordan Roy-Byrne, and I'm here at the September Metals Investor Forum here in Vancouver, British Columbia, with Gwen Preston, also known as the Resource Maven. Gwen, there's so much to talk about. I mean, we can talk about metals prices, we can talk about juniors being rewarded for outstanding results. I mean, what's on your mind? What do you want to start with?
I think in conversation with you in particular, what I'm most excited about, I guess, is that I work in more the fundamentals world. I don't look a lot at technicals, I don't look a lot at charts. I work in fundamentals in terms of trying to predict what's going to go on with gold and copper and whatnot, and companies. And you look more on the chart side. But right now, those things are aligning better than they have for this market, for this bull market to date, right? Like gold has broken up through a bunch of technical barriers. To me, the fundamentals in terms of uncertainty around economics, uncertainty around geopolitics, in terms of the US dollar, everything seems to be aligning and has created a situation where the technicals now support things to keep going.
Right. It's always nice to find those things in agreement. From there, you mentioned so many potential drivers. I mean, what do you expect for the rest of the year? I mean, either on the commodity side or with respect to companies. I mean, are there a lot of companies that still have to report results from their summer programs? I mean, could those things be catalysts for a number of companies?
Absolutely. So, yes. So I think for the rest of the year, gold has reason to maintain momentum. Is there going to be a correction within that? Quite likely. You are better to speak to that sort of thing from a chart perspective. But I think the uncertainty that is just dominant in the world right now from a cyclicality perspective, from a concerns about the US bull market perspective, I think gold has a lot of reason to keep moving. The US dollar, I guess, is a question mark there, but I'm going to turn that question on you in a second. And then on the equity side, we've been lacking leverage in mining equities. So gold has made this big move in the last month, but we've been lacking leverage. I'm personally attributing that to, in 2016, gold-attuned investors jumped in with both feet, created all the leverage, that's great. In 2017, what we need now are more of the generalist investors to move in, because we can't continue to create the leverage, we need more volume. And I think these things all go hand in hand. All of that uncertainty, all of those reasons that are fundamentally supportive of gold, including real rates, bring slowly but surely the contrast between the overvaluation, the risk in the markets and the dollar and whatnot, bring people over to gold, and we'll create those opportunities. So, but yeah, I'm curious what you think about the dollar and about gold and technical parameters over the rest of the year.
Well, I think in the very short term, the dollar, it got extremely oversold, so we're seeing we're seeing a bounce there. And so really the question is this thing going to bounce for, just a month or two, a couple weeks, or is it something that could go on a lot longer? I mean, the dollar falling below, it had this bullish consolidation around, support around 92, and it broke below that, but it got very oversold. So we're bouncing now, and the only concern I have technically is the fact that the dollar made a new low, but gold didn't make a new high. So that's, if you want to put something in the negative camp, that's one thing. But on the positive side, 1,300, very strong resistance, and we cleared that no problem. Yeah. We didn't quite get up to 1,370, 1,375, but nevertheless, I think looking at gold, I mean, it has this really bullish bottoming pattern. You go back 3 or 4 years, you can see it. I mean, some people are calling it a head and shoulders bottom, but for me, maybe that doesn't break out in the next couple months. I mean, maybe it takes as much as 6 months to break out. But if that's going to happen early next year and gold gets above 1,375, there's a lot of room where it can run. And if you look at the mining indices, it's the same thing. So I don't, is that breakout going to come immediately? I don't think so, but I think it's looming. It's something that could be, maybe a couple months, maybe 6 months. I don't know, but as investors, we need to keep that in the back of our minds. And again, if this dollar rally goes on for more than a couple weeks, that's going to create some great opportunities. And just the last thing I'll say is, I'm a little surprised, because even though the stocks haven't been showing that much leverage, gold was stronger for most of the year, but I know you can speak to this. Juniors that were doing great work and had great results, they were doing fantastic regardless of what metals prices are doing. So that has me excited. It seems like the industry is really in a bull market, And if you're doing good work, you add value to your project or you make a discovery, your stock is going to perform really well, regardless of whether gold's trading at $12.75 or $13.50.
Absolutely. And if this plays out the way we're both generally expecting, with gold then in sometime in the next 3-6 months making a move, then I think that will bring those generalists in who will amplify the excitement that's already here from those who are involved in the sector and who are rewarding good companies with great results, like Novo, like GT Gold, like these companies that have generated incredible market responses to discoveries. Like, it really is just all lining up for this to be a pretty exciting market. And I think that one thing I want to add is that the base metals have done so well in the last year. I'm calling multi-metal rallies are always stronger than sort of a gold or a precious metals only rally. I mean, we don't want to sort of get too carried away, but it seems to all really be lining up to do well over the next near term for sure.
Absolutely. And I mean, I'll just come back to what you were talking about before with the stock market. I think that's a very important catalyst, more so for the precious metals than the base metals, because and you talked about it, and it's so key. I talk about this so much. With respect to precious metals, I mean, they need to be outperforming the stock market if that generalist money is going to come in. I mean, look, if the stock market is going to continue to go higher, base metals will probably continue to outperform gold. Mm-hmm. But and juniors can still do well. But if we really want to see that big move higher in gold to take out that resistance, where a lot of generalist money comes in, we have to see the equity market, the broader U.S. equity market, have some kind of correction, because, as you said, if that keeps going up, the generalist money, there's no reason for them to go into gold, and juniors if the U.S. market is just going to keep going up.
Although I do say that right now, or in the last months, I'd say the amount of discussion in mainstream media over risks in the U.S. equity market has increased significantly over a year ago. It's a bull market until it isn't a bull market, so I'm not going to say it's crashing tomorrow, but I think people are becoming increasingly aware of the valuation levels, and overlay that with all of the uncertainty around North Korea, around Trump, around the dollar, and you're setting up for people to start moving away from that bull market out of fear that that correction that you talk about is coming.
Right. I know we've covered a lot here, but as we close, any final comments on maybe anything we didn't cover? I
mean, I just say if you are open to gold, if you're interested in gold and you don't have a position, I do think that it's a really important time to dip your toe in, get some exposure, because I really think that we're getting on to a pretty exciting time in the market.
Thanks so much, Gwen.
Perfect. Thanks.